Hello and welcome back to the lesson. The subject is auditing and assurance. Today we're going to begin on the second chapter, which is assurance and non-assurance engagements. This chapter has 11 subchapters. 1, definition and objectives of assurance engagements. 2, audit as an assurance engagement. 3, elements of an assurance engagement. 4, types of assurance engagements. 5, differences between audit and review engagements. 6, international standard on assurance engagement number 3000. 7, accepting appointment to perform assurance engagement. 8, review of interim financial information, that is ISRE 2410. 9, levels of assurance and reports issued on assurance engagements. 10, non-assurance engagements. 11, attestation and direct reporting engagements. These are 11 subchapters. We are going to take a subchapter one at a time. To begin with the definition and objectives of assurance engagements. So by the end of this lesson, you should be able to define assurance engagements and also explain the objectives of assurance engagements. What is the meaning of assurance engagement? That is a question we are going to answer in this class. Then we will explain the objectives or goals of assurance engagement. So welcome to the lesson. Definition of assurance engagement. Definition of assurance engagement. Now, candidates, an assurance engagement is an independent professional service in which a practitioner, such as an auditor, expresses a conclusion designed to enhance the degree of confidence of intended users other than the responsible party about the outcome of evaluation or measurement of a subject matter against a criteria. That is the meaning of an assurance engagement. First of all, it is an independent professional service. That is to say that an assurance engagement is performed by a professional who could be an auditor. And this professional expresses a conclusion designed to enhance the degree of confidence. That's why we are talking about assurance, from the word assure, to assure. It is to enhance the degree of confidence. Now, in simpler terms, an assurance engagement is a process where a professional examines information prepared by someone else and gives their opinion on whether the information is reliable and accurate. That is, to put it simply, it is a process where a professional, initially this professional I termed a practitioner. So it is a process where, number one, a professional examines information. And this information could be financial statements, because in our next lesson we'll be looking at audit as an assurance engagement. So it is a process where a professional examines information prepared by someone else, It is a process where a professional examines information prepared by someone else, all right, and gives their opinion as to whether that information is accurate and reliable, and gives their opinion. And that's what? And gives their opinion on whether the information, which information? This information. Whether the information is reliable and accurate. For example, I've given an example of an audit of financial statements. Now, financial statements are prepared by the management. It's the management that has a duty to ensure that financial statements are prepared. The income statement, the statement of the balance sheet, the cash flows, and all that. That is the role of the management. An audit, we've said, is an example of an assurance engagement. So an auditor is a professional, all right, who examines these financial statements. The auditor examines these financial statements. They are prepared by someone else. Okay? A professional examines information prepared by someone else. Examining means an audit is an examination of the financial statements or information to examine. Okay? Now, after examining, this examination is carried out based on a certain criteria. When auditing financial statements, there is a criteria that the auditor is required to follow. That's why we have international standards on auditing. Auditors do not examine statements anyhow. No, they have to follow a certain criteria, international standards on auditing. Okay? So the auditor examines information prepared by someone else and gives the opinion. After examining the financial statements, then the auditor gives an opinion on whether that information, these financial statements, for example, is reliable and accurate. So an audit is an example of an assurance engagement. It is an independent professional service in which a practitioner expresses a conclusion designed to enhance the degree of confidence. Because candidates, the financial statements that are prepared by the management are meant for consumption by various users. These financial statements are to be used by investors, the financial institutions or lenders, the government. There are many stakeholders who may want to use these financial instruments to make their own decisions. You understand? And they can only rely on this information because this information, the auditor gives his opinion as to whether this financial information is reliable. Reliable means, can that information be relied upon by the users? So these users can only trust the opinion of an independent person who is a professional who examines these records based on a certain criteria, international standards on auditing and any other standards like the international financial reporting standards, because financial statements are prepared in line with international financial reporting standards, international accounting standards, and generally accepted accounting standards. So the auditor has to examine whether this management prepared these statements based on the framework, accounting framework. So after examining these records, the auditor will give an opinion as to whether the information is reliable and accurate, or whether that information is not reliable or not accurate. So that it can give the users assurance, degree of confidence. If as an investor you would want to invest in company A, you have to know the financial position of company A. And how can you rely on information of this company if not on the basis of an opinion of a professional? So auditors, professionals in assurance engagement, they help the users with what we call providing level or degree of confidence. If you know that these financial statements have been audited by an independent person, because it is an independent professional service. Because if this information is not audited, the information can be manipulated by the originators, because we've said that this information must be prepared by someone else, must be examined by someone else. Examine information prepared by someone else who is a professional who gives their opinion as to whether the information is reliable and accurate. So that's the meaning of an assurance engagement. We've given just one example. There are many different types of assurance engagement. Do you understand? So the professional gives their opinion on whether the information is reliable and accurate. And this opinion helps users of the information make informed decisions. Okay? It could be an investor want to make a decision as to whether you can buy shares of the company. It could be the banks that may want to lend money to that company. It could be the suppliers. It could be the employees. Maybe you are a potential employee, you want to be employed in this company. You'd want to know the financial position, the stability of this company before choosing to work for such a company. Do you understand? The professional's opinion helps the users make informed decisions. And I've given one example to help you understand, one example of an assurance engagement. Examples of assurance engagements. One I've said is the audit of financial statements. Audit of financial statements. In our last chapter, we defined what is an audit, and we saw that an audit is an independent and comprehensive examination of the financial statements of an organization with a view of giving an opinion as to whether they portray a true or fair view. Okay? So this is the most common type of assurance engagement, audit of financial statements, where an auditor examines a company's financial statements and provides an opinion on their fairness and truthfulness. So in auditing financial statements, the auditor gives his or her opinion on whether the information is reliable or accurate, whether it is fair and all that of financial statements. There is also a review of financial statements. Review of financial statements. That is also an example of an assurance engagement. But a review is less comprehensive engagement than an audit, where the auditor provides limited assurance on the financial statements. And as we move on, we'll be seeing the difference between review of financial statements and audit of financial statements. This one gives assurance that is not as reasonable as that of financial statements. It is less comprehensive because it gives limited assurance. And the reason why it gives limited assurance is because of the scope. When reviewing the financial statements, the auditor does not carry out tests of control. It does not carry out comprehensive analytical procedures or substantive procedures, all right? The scope is limited, and therefore the auditor gives less or limited assurance. Review of finance is an example. You understand? Those are examples of assurance engagement. We will highlight more examples as we move on, but let's identify some of the objectives of assurance engagement. Objectives. What is the objective of assurance engagement? Now, candidates, the first objective, which we can pick from the definition, is confidence. Just as I've given examples here. The professional, through his opinion, can enhance the confidence of the users in the reliability and accuracy of the financial statements. Is to enhance confidence. Assurance is confidence. It is to assure the users that this information that has been presented by the management is reliable and accurate, or it is not reliable, it is not accurate. Okay? So, because that opinion can be negative or positive, be a positive opinion or negative opinion. So, the objective here is to increase the level of trust that users, such as investors, creditors, or regulators, may have in the information presented about the subject matter. And here the subject matter could be the financial statements. And that is achieved through the independent and objective assessment provided by the practitioner. This practitioner has to be independent. That means he's not employed or hired by the preparers of the financial statements. He's maybe hired by the owners or the shareholders, and that makes the professional to be independent of management. To enhance confidence is the first objective of assurance engagements. Number 2 is to provide assurance. Provide assurance. To provide assurance is to offer an independent and objective assessment of the subject matter. Do you understand? which reduces what we call information risk that may be caused by bias, by complexity, by remoteness, and so on. When preparing financial statements, the management may face or may be biased, okay? Or the information may not be as accurate because of complexity. So the auditor comes in to provide assurance because the examination is independent and objective. The assessment is objective, which reduces information risk that is caused by complexity or bias. 3, express. The third objective is to express a conclusion. The objective of an assurance engagement is to express a conclusion. That means to issue a formal opinion on whether the subject matter conforms in all material respects. Now, when I refer to subject matter, I mean the records that are being audited. I've given an example of financial statements. It could be things like internal controls. Internal controls can be another example of subject matter. The auditor or professional can do an examination of the internal controls of an organization with the view of expressing an opinion as to whether they are accurate, effective, or efficient, and all that. It could be subject matter could be the organization's information system. It could be information system. You understand? It can be anything within the organization that is being audited or examined. Subject matter. So the objective is to, or one objective is to express a conclusion on whether the subject matter conforms in all material respects with the identified suitable criteria. And later on, we'll be studying more about the criteria, subject matter criteria, and all that, which are the elements of an assurance engagement. So this conclusion is typically expressed in a written report. So if the assurance engagement is audit of financial statements or review of financial statements or examination of internal controls or examination of information system, there has to be a conclusion which is in form of expressed in form of a written report. So this opinion is contained in a written report. So the objective is to express, one objective is to express a conclusion. The fourth objective is in relation to decision making, is to improve decision making. Assurance engagements improves decision making. This engagement enables users to make more informed and better decisions based on the assured information. And the increased confidence in the information then allows the users to rely on it for various decision-making purposes. If it is investment, then one can decide based on this opinion to invest or not invest. If it is financing, if a financial institution relies on this information, it can make a decision as to whether to advance finance this to a company or not. If it's a potential employee who would want to dedicate his time and work in that organization, he can use this assurance engagement to make a decision as to whether to accept employment in a company or not. So these assurance engagements helps or improves decision making. You understand? Another objective is to add it adds credibility, improves, adds, enhances credibility. Okay? Assurance engagements enhance the credibility of the information presented. If these financial statements as presented by management are examined by a professional who gives a positive opinion, then it improves, it enhances the credibility of such information, making it more reliable, making it more trustworthy. So the assurance provided by an independent practitioner, we can say in other words, adds another layer of credibility to the information, which is valuable for stakeholders, valuable for the users of the financial statements. All right. These are primary objectives. There are other secondary objectives like deterrence. Deterrence is an objective. The presence of an assurance engagement can deter the responsible party from mispresenting information or engaging in fraudulent activities. Deterrence. 7 is another secondary objective, detection. Detection is an objective. Assurance engagements may help detect errors, fraud, or even non-compliance with regulations, leading to corrective actions. 8, improvements. Improvements. These are secondary objectives. The findings and recommendations from an assurance engagement can be used to improve processes. They can be used to improve internal controls. They can provide assurance. They can express a conclusion, and so on. It can lead to improvements based on the recommendations, because we say that apart from the opinion, the expert can also give recommendations on the financial statements, on the internal controls, information system, depending on the subject matter. They can give recommendations, and then based on the recommendations, a company can make improvements. So that is to say, candidates, that these objectives serve to protect the interests of the users of the information. Okay, because information prepared by an organization is meant for consumption by multiple stakeholders. And when there is an independent examination of such information, in which the professional gives their opinion as to whether the information is reliable or accurate, then such information can be useful. Okay? That such information can serve to protect the interests of the users of the information and then contribute to the overall integrity and reliability of the information environment. So that is the meaning of assurance engagements. We've defined assurance engagement. We've given a few examples. As we move on, we'll be looking at different examples of assurance and non-assurance engagements. We've highlighted 5 primary objectives and other objectives, secondary objectives. And that's the end of the lesson. Assignment. What are the key objectives of assurance engagement? Number 1. Number 2, how does an assurance engagement enhance the credibility of information? Explain the three-party relationship involved in an assurance engagement. Number 4, what's the difference between an assurance engagement and a consulting engagement. In our next lesson, we are going to study audit as an assurance engagement. Audit as an assurance engagement. Bye.